Hello and welcome to the look ahead for Tuesday, the 15th of October, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, overnight, we'll be watching out for industrial production figures from Japan. In the European session, we've got unemployment data from the UK, as well as German and Eurozone ZEW economic sentiment figures. Then, over in the US session, we have Canadian inflation data, and also earnings season will be picking up with numbers from earnings from the major banks, including Bank of America, Citigroup, Goldman Sachs, and also Johnson and Johnson, amid some other big names. So, I mean, there's so much to pick from here. I'm not really sure where to get going, but we'll start off with earnings season. Obviously, we saw the big banks kick off earnings season on Friday, and the numbers, upbeat numbers from JP Morgan, Wells Fargo, and asset manager BlackRock helped lift the Dow Jones and the S&P 500 to record highs. We've got the S&P trading at a fresh record high today on Monday as we look ahead to tomorrow's earnings. So numbers are expected to be encouraging, particularly if we think about the investment banking side of the business as far as Goldman Sachs is concerned. Goldman investment banking is seeing a recovery after a couple of quiet years. So if we're seeing encouraging data, encouraging numbers from the US corporates, then that's going to be good news as far as the S&P 500 is concerned. Obviously, we're looking at these numbers coming in whilst the S&P is at record highs. So that does mean that the bar is high. So we do need to see these numbers impressing in order to support lofty valuations. There isn't really much on the cards as far as US economic data is concerned. This week it is particularly quiet. There's just US retail sales on Thursday, but we do have Fed speakers across the week. And I mean, broadly speaking, again, the outlook as far as interest rates are concerned is also supportive for the equities, with the Federal Reserve expected to cut interest rates by 25 basis points in November and again in December. So this is the S&P 500 we're looking at. Had just been trading in a little bit of a holding pattern towards the end of September and at the beginning of October, but you know what, it looks like we're breaking out of that now. We're seeing we've jumped quite significantly higher at the moment. I mean, it's blue skies above. We're currently at around 58, over 58.50, so looking towards 5,900 and eventually 6,000. They will be the numbers to be focusing on. Just as far as support is concerned, immediate support there on the downside, and minor support, I would say, is around that 57.50 level. And then below that, we've got the low here, which was the low from October, which is around the 56.85 level, so 56.75, around there. So if we get a break below that level, that's what's needed to create a lower low. Otherwise, the uptrend remains intact for now, and they are the figures that I will be looking out for. So just with what else? I mean, let's have a look at USD Japanese yen, because that's another really interesting chart that we've got going on here. We've seen this rebound in the US dollar over the past 3 weeks at the same time that we've seen that weakening in the yen. Basically, as the Federal Reserve and the market sort of reining in hawkish or outsized Federal Reserve rate cuts, they're seeing a much more gradual pace to the Fed cutting rates. And at the same time, there are some questions over whether the Bank of Japan will be hiking rates as well. So a combination of those factors is supporting USD Japanese yen, pushing it to its highest level since the end of July. So data overnight, industrial production is expected to fall 3.3% month on month after rising 3.3% in the previous month. As I said, there isn't much on the way for data as far as the US dollar is concerned. But weak data could see the figures, could see the pair continue to rise. We're not in overbought territories. The RSI continues to support the move higher as we approach the 150.74. It's 150.78. That's the 50% fib level from the 162 high down to the 130 149.70 low. We've also got the 200 SMA there in at 150, just about 151.20, and that rising trend line that dates back to 2022. So there's quite a lot of resistance that the pair needs to get above in order to be able to extend that move back up towards the 153.40 level. So there's still quite a lot of work to be done there. On the downside, we've got this level here, which is the 148.20, which is the 38.2% fib level, and then below that we've got this level here, which is the 146. It's the low back from 7th of March. We're looking at around 146.50 level. So a couple of support levels on the downside ahead of 145 round number, which is also the 50 SMA. Other level things to be watching. We've got obviously the UK data, sterling US dollar. This is the chart here. A lot of attention. It's been a little bit of a quiet week last week for sterling US dollar as far as data is concerned. We just had the GDP figures came in a little bit stronger than expected at 0.2%. No, sorry, in line with expectations at 0.2%, after stagnating for the two previous months at 0%. So some encouraging news as far as growth is concerned. I mean, not hot growth, but at least it's something. As far as unemployment data is concerned and jobs data is concerned, we're looking for unemployment to remain unchanged at around the 4.1%, which is actually relatively historically still low as far as unemployment is concerned. We're also expecting to see wage growth slow. Now, this is what's going to be really interesting. Wage growth is what we're going to be watching. It's going to expect it to ease to 4.9%, down from 5.1%. Wage growth is intrinsically linked to service sector inflation. So the Bank of England is watching service sector inflation and wage growth numbers, which have proved to be very sticky, closely, because they've proved to be hurdles to accelerating the pace of rate cuts. Now, Bank of England Governor Andrew Bailey did say at the start of the month that if data allowed it, then the Bank of England could start to cut interest rates more aggressively. Now, we've got inflation data on Wednesday. But if we get a larger than expected fall in wage growth, then that could see the pound come under pressure, particularly given the recent US dollar strength that we've seen. Key level 130 exactly, round number. If we get a break below that, that's going to create the lower low. And that's going to change the chart, taking out that support level. It's going to open the door to that falling trend line around the 129 level and the 200 SMA at the 127.85 level. But it does change the chart considerably. It's no longer sort of in that uptrend that we've actually been in since the start of April, if we actually book a lower low. If we find that that level holds, we get stronger than expected, unemployment data, wage growth, etc., then on the upside, watch out for 131.10. That's the 50 SMA. We've also got 131.50, which was last week's high. Above there, next level to be looking out for 132.60, which was the high in August. So that is sterling US dollar. Just going to have a quick look as well at the DAX. As I said, we've got that German data coming in, but the DAX is trading actually around all-time highs, despite the fact there have been some concerns about the health of the German economy. But the ECB is expected to cut interest rates again in the meeting this week by 25 basis points. That's obviously going to make conditions easier for businesses in the Eurozone and in Germany. Actually, the ZEW economic sentiment for Germany is expected to improve from 3.6 to 10. So we're starting to see perhaps tentative signs of data from Germany showing, it still feels a bit early, but there have been a couple of better than expected readings from German data over the past couple of weeks. So, I mean, if we do see encouraging data from ZEW, well, is again a step in the right direction, which combined with the ECB cutting interest rates is offering support to the DAX. We've got the DAX, as I said, trading at all-time highs. A rise above 19,520 will see bulls look towards that 20,000 psychological level. On the downside, support here at 19,000. If we get a break below that, that's when we're going to get a lower low in place, just changing the structure of the chart and negating that near-term uptrend. And just finally, as I said, we've also got inflation from Canada in focus now. Canadian inflation is expected to ease to 1.8%, down from 2%. So, below the Bank of Canada's target level, encouraging the central bank to cut interest rates again. They've already cut interest rates on several occasions. We can see here that the loonie's been weakening quite considerably against the US dollar as we've seen the market rein in those outsized Fed rate cut expectations. Whilst the loonies also been struggling, we've seen oil prices fall today as well on concerns of the outlook for China, and also as OPEC lowered its demand outlook for 2024. So that's all playing into the weakness on the loonie, although the loonie was still weakening even when we saw strong growth in oil prices. So that's just something to keep in mind as well. When we saw that 9% growth in oil prices a couple of weeks ago, we still saw the loonie weaken against the stronger US dollar. So just as far as levels are concerned, key level here, 137, 138. That's the October high. It's what we're trading at today. It's the highest level that we've seen since early August. We get a rise above here, it's going to bring 139 into focus as the next level on the upside. Just be wary though, we are in overbought territory here, so we could actually see a period of consolidation just below that 138 level, or at least a move lower. It would take a move below here, the 136.10, which is the 200 SMA, and also a level that's offered support and resistance on numerous occasions in order to negate that near-term uptrend, and a fall below 134.50 to change the structure and to see a lower low. So I hope you like everything that we've been through today. And if you do, then please do give this video a like. And if you would like to see more videos like it, then please do subscribe.